Still on the theme of positioning for uncertainty and looming risks, China, starting September, is introducing artificial intelligence courses in primary and secondary schools. This is to prepare to dominate the sector as economies transition into a new AI-driven digital age. Niyi Yusuf, Managing Partner Verraki and Chairman Nigerian Economic Summit Group, also comments on how businesses are coping with the uncertainty. It's all about staying close to customers to have more insights into their needs and improving foresight. Also about fostering more flexibility in your execution. Hello, welcome to Global Business Insights, where we look deeper at the main business stories. Today focuses on businesses and uncertainty as we continue to navigate an unusual year, already described as one of phenomenal uncertainty.
So how can companies cope during uncertainty? One thing that is clear is that 2025 is a year of uncertainties. There'll be increase in costs, there'll be a lot of crisis and chaos. And so the first thing really is just stay close to your customer, hug your customers, understand their situation, understand their concerns, understand the challenges they are facing, and that gives you insight so that you can then forecast what that means for your own business. And as you're staying close to your customer, you also need to go and stay close to your partners, your trade partners, your distributors, your suppliers. This is the time when you need just create strategic relationships with them so that they can flex their schedule with you, so that they can support you to really withstand the pressures that will come this year. And talking about pressure, there will be currency pressure. So it's the time this year is when you want to see if you can do a lot of local costs as opposed to foreign currency costs. And also a lot of variable costs as opposed to fixed costs. So how can you variabilize your costs? Whether it's your labor costs, your production costs, your input costs, your technology costs, even your warehousing, your supply chain costs. How can you turn them into variables and less of fixed costs? That is important for you to do this year. And this year will be a time for more of just in case and less of just in time manufacturing. So JIT won't work because you're not sure of when there will be disruptions, and there will be disruptions based on uncertainty. And so it's got to be more of just in case. So you build a bit of reserves, you build a bit of stock to avoid situation of stock out that can impair your production. And talking about buffer, you also need to have cash buffers. Liquidity is important, and liquidity will be king this year. So have cash buffers that can allow you to respond to challenges, but also to seize unexpected opportunities. Many companies will need to sell assets, will need to even shut down. And so this is a period where you really want to work and see how you can use your cash to take advantages of these opportunities. Risk management is important. Compliance is also important. And so the US has waived the FCPA, that's the Foreign Corrupt Practices Act. But that doesn't mean other countries have. The UK Bribery Act is still operational. In Nigeria, the EFCC or the ICPC Act are still operational. And so you've got to understand the lay of the land. And so you need to have capabilities to watch risks, monitor trends, look at compliance, and ensure your company is compliant with the relevant laws, both local and in other markets where you play. And talking about that market, geodiversity is important. You got to geodiversify your capabilities, be it production, be it input sourcing, be it even where you have factories or where you source from or where you hire people from. You got to hire from different geography. As you supply to the north, you must supply to the south. As you buy from the west, you must also buy from the east. So geodiversity is important to avoid concentration risk. Your inbound supply chain, your outbound supply chain should not be overtly concentrated on one source. So as you ship through land, you must ship through sea, you must ship through the air. As you transport through rail, you must transport through roads, etc. So your inbound and outbound logistics, your sources, your warehouses, they all should be diversified so that you are not concentrated in one area. Hope is not the strategy. So while we hope for the best, we must prepare for the worst, and that's the story of this year. You must embrace the uncertainty. You must prepare for the worst that can come. The military talk about VUCA, volatility, uncertainty, complexity, and ambiguity. That's what will happen this year. So you must prepare for all those and look at different scenarios that would then ensure that whatever happens, you're able to thrive. And that means you must follow the data. You must follow the data. You must have management systems in place with both leading and lagging indicators so that you can get a sense of what is about to come. You can get a sense of what is likely to come. And you can then act and take informed decisions based on the data that's available to you. So you manage your business based on data, not based on emotions or based on feelings. And you must consistently communicate, and I'll say even over communicate with your staff, with your suppliers, so that they understand why you're taking decisions that you're taking. The mission remains the same, but your tactics this year, your initiatives this year must be flexible and must change based on the dynamics of the situation. And if you do this, you're able to build trust and build some level of understanding with your staff, with your suppliers, with your customers, so that together you can flex and adjust to be able to have some level of stability even this period of uncertainty.
Scenario planning will be more important, also knowing how to read the data triggers and responding not with panic, but also drawing on built-in flexibilities and being able to pivot more easily, having more variable and diverse sourcing of inputs. Analysts say the leading global organizations are still able to tackle their core challenges by reinventing their processes end to end swiftly as the context changes, also aligning their leadership and setting measurable goals to drive impact, not for yesterday's environment, but in a future somewhat unpredictable context. Also, they are rethinking talent management to get the best results in the more digital, dynamic environment. We will bring other perspectives on what businesses can do differently as we explore this theme of uncertainty in other episodes. For more business news, China's National Consumer Price Index in February fell into negative territory for the first time since January last year, weighed down by a decline in food, tobacco and alcohol prices. The CPI declined by 0.7% last month, reversing a year-on-year gain of 0.5% in January. Analysts had expected a shallower contraction of 0.5%. Last week, it was all about lack of clarity concerning tariffs and implications for the global economy. The Nasdaq has also dropped, that's the US tech index, over 10% from its last record high in December. That is a technical correction. It's still too early to read this week's US Producer Price Index and Consumer Price Index as leading measures on the impact of tariffs, even as investors separate the noise, that is the euphoria and pessimism, from the signals. Last Friday's US jobs report was greeted with a sigh of relief as it showed the labor market added 151,000 jobs in the month, just below expectations, and unemployment rate up to 4.1%. With other signs of slowing growth, it was better than many had feared. Fed Chair Jerome Powell remained cautious on Friday, warning that policy uncertainty makes it difficult for the Reserve Committee, that's the Monetary Policy Committee, to enact policy adjustments, adding that the U.S. economy is in a good place despite the elevated uncertainty. Still in the U.S., Treasury Secretary Scott Bessent on Friday also said the U.S. economy is going through a natural adjustment as it transitions away from public spending to private spending, describing what looks like a market shock as a detox period. He also added that tariffs are a one-time price adjustment. Trump had said Americans should expect a little disturbance from his trade policies, and he did not rule out a shallow recession this year. Trump also said the administration was in touch with 4 different groups examining the options on the sale of TikTok. On Saturday, China announced tariffs on over $2.6 billion worth of Canadian agricultural and food products, retaliating against levies introduced in October by Canada. The levies are scheduled to take effect on the 20th of March, and they will match the 100% and 25% import duties Ottawa slapped on China-made electric vehicles and steel and aluminium products. Nigeria's total merchandise trade recorded significant growth in the fourth quarter of 2024, driven by a sharp rise in imports and steady export performance. The surplus for the quarter stood at 3.42 trillion naira, reflecting a 34.9% drop from the previous data, largely attributed to the continued rise in imports and a marginal drop in export earnings. Crude oil continued to dominate Nigeria's exports, accounting for 68.9% of total exports. Nigeria needs to expand non-crude oil value-added exports and grow a manufacturing and production base to substitute more of the importing that it does. And in South Africa, the rand had its best week in over 6 months, fueled by positive domestic data. The South African local currency gained about 2.5% over the week, making it the best week since August. Analysts attributed the strength to positive domestic data, showing SA's economy returning to growth in the fourth quarter, with GDP expanding 0.6% quarter on quarter. Looking at crude oil prices, they were lower this morning on concerns about global economic growth and fuel demand, as well as increased production quota from OPEC Plus producers. Brent crude standard in early morning trade inched down to $70 a barrel. Still again on the theme of uncertainty, the IMF last week has been speaking on its role in the Asia-Pacific region, and later in a speech last Thursday, Deputy Managing Director Nigel Clarke at a symposium on the future of international cooperation on the 80th anniversary of the end of World War II said a chasm has opened between aspiration and reality, with, of course, all the attendant uncertainty. He suggests the IMF can help steady the ship, being a seasoned repository of knowledge on how to do this, adding that the IMF can also help countries to design well-phased and well-communicated plans for budget consolidation and maintaining effective monetary policies to contain inflation. Also, the IMF New Advisory Council on Entrepreneurship and Growth can also share lessons to help countries get the growth they need, including how to harness technological advancement, notably in artificial intelligence, also helping to achieve smaller government footprints, smarter tax regimes, more efficient public spending, and better infrastructure. My sense is that the IMF can only be an enabler in the equation for growth. It does its fair share in enabling nations that already have the appetite for change and a good navigation and execution framework. But what I think needs to be strengthened is its capacity to influence the major economies like the United States and China to act in the interest of global priorities, as opposed to, of late, a more nationalist and protectionist stance. Leaders, especially in Africa, have a poor image of the IMF, looking at 80 years that seem to have extended the gap between the south and northern countries and expanded inequality between wealthy and poorer nations, causing many to think the IMF serves better the interest of the richer West. Germany's industrial sector this morning reported an impressive upturn in January, jumping 2% month-on-month, better than 1.5% expected, and reversing a revised 1.5% decline in December. Asia-Pacific markets were mixed, with concern that in China an excess capacity is fueling deflation, which will weigh on growth. Canada's ruling Liberal Party elected Mark Carney, former central bank UK boss, as its new leader, also expected to try to ease trade tensions with Donald Trump. Well, that's all we can take on this episode of Global Business Insights. Thanks for watching. This is Bode Oshosami. Bye-bye.